I want to go back to that margin story. So for this quarter, margin, the estimate 7.2%, a very slight expansion from a year ago on revenues declining by about 2%. What does that say about this plan by CEO Carol Tomé to really focus on higher margin business?
Yeah, listen, Frank, there's a lot going on at UPS, right? First, you're losing 50% of Amazon business over the 6 quarters, right? So by mid next year, they're going to have lost 50%. They also lost the de minimis business, right? So all that low-cost e-commerce business that was coming from China. So you're talking about what can you do on the cost side to offset all that lost business. And so Carol has been, Tomé, the CEO, has been aggressively moving to cut costs. You mentioned the employees. They're closing facilities. They've never done that in UPS's life cycle. So just like FedEx, UPS making fast moves to try and cut costs to keep pace with the changing, shifting volume metrics out there.
When you're looking at this company, how do you see tariffs impacting it? Obviously, UPS is very levered to the U.S. package business, but they do have assets overseas. And we've heard Carol Tomé previously say they're really encouraging customers to use their broad, array of assets, whether it be in Vietnam, Malaysia, et cetera.
Yeah, listen, the assets are portable, right? The planes, you can move them. Facilities are not as portable. So it's all about getting density. And as volumes have really come down, you talk about tariffs, talk about shifting volumes. We talked about our truck shipper survey showing a really light demand market right now. So given that backdrop with a light demand volume, you lose that operating leverage. And so that's why you talk about domestic margins being at low upper single digits, 7-ish%. International margins are at 14%. That's the lowest in more than a decade at these levels. So clearly you've got to make moves to cut costs to align that. That's what everybody's watching from Carol Tomé, the CEO, to see if they can do that fast enough.
I want to look at it very quickly. C.H. Robinson coming up later in the week. The #1 shipper on that U.S. to Asia lane, what are you expecting when it comes to that? And are we going to see the impact of tariffs there?
Listen, big shippers, C.H. Robinson, you mentioned, is a freight forwarder as well as a truck broker. Truck brokers, much bigger part of their business. And they're going to benefit by really low truck price rates this past quarter. Spot rates are at very low levels, almost break even. So given that, on the brokerage side, their truck brokerage side, they're going to do very well. The freight forwarding side, where you're moving stuff without owning it, so by ocean, by air, with the reduced volumes, that side will feel some pain. We think it'll be more than made up for by the margins on the truck brokerage side. That'll hit some pain points for other companies like Expeditors that just move international freight. You'll definitely see that. But you'll also see that in UPS's results later this morning.